Hi, everybody. Welcome to the October 28th edition of Markonomics 101, the show called Hoot Loot. Be informed, not misled, the place for education, information without fabrication. And you know where the fabrication comes from. It comes from our friends in the media, but it doesn't come here. Not on Markonomics 101. We have an incredible market analysis for you today, and it's going to just dovetail with what we said a week ago when the title of our program was, Are We Approaching a Waterfall? Well, not only are we approaching one, I'm sitting on the edge of one. The biggest damn waterfall in the United States, Niagara Falls. I'm trying really hard not to let this, let all the breeze and the wind splatter, throw me over the cliff. But if you're one of the investors holding long stocks right now, you know what it's like to be going over the cliff. So with that, I'm going to show you exactly what's going on. And we're going to go through some of the same things and what to expect coming forward here. This is a very treacherous time. All right, so we're going to start with the big picture. This is the Standard & Poor's 500. Again, I've drawn the 7-point reverse wave, and as you can see, it's in red. 1, 2, 3, 4, 5, 6, 7. There's a series of higher highs and lower lows, just like a megaphone. And usually a 5 is enough for reversal. It was in this case. I mean, that did mark a top. 7 is going to mark, in my opinion, the top. The top. The top. This is over. All right. So with that, let's go on to the NASDAQ 100 for its last 20 years monthly. It always helps to look at these things because sometimes you just don't realize how much, how the patterns are so similar over different periods of time. Well, the NASDAQ 100 here, it took 17 years if you had bought at the top of its last bubble. So right now, if you're thinking about buying up here at the top of this bubble here, where this bubble is here, I really wouldn't be buying here because that's going to take you probably 17 to 20 years just to break even. The market is that overvalued, and you're not going to make money buying high or buying low and selling high here. You can't buy low. You can only buy high and pray that some other idiot buys from you at a higher price. It's called the greater fool theory. And unfortunately, that's kind of what you need today. Is you need somebody that's even dumber than you if you're going to buy stuff. And believe me, I've been there. So I'm not like trying to come down on people who've done that. I've done it a million times, but I've done it. I've made that mistake. I don't want you to make that mistake. The whole point of this show is to keep you from making the same mistakes I made and to make you a good trader, one that makes money and one that doesn't listen to the crap outside that you're going to hear. You're going to hear nothing but the truth here. All right, so NASDAQ 100, you can also see in green the uptrend lines. Look how steep it got at the very end there, almost vertical, straight up. That is a sign of exhaustion, folks, and that is a sign that this market is cooked. So, I'm going to go on the next chart, and that's the Dow Jones Industrials for the last year. Now, remember, I've been talking about for the last several weeks head and shoulders patterns, and enough so to where that was people kept stopping me on the street, going, "There's Mr. Head and Shoulders." I'm not sure if they're talking about my dandruff or they're talking about my chart patterns, but I didn't ask. Fortunately, I don't have any dandruff. I have this beautiful hair, and if I was a woman, I'd be all over me, but we already know that. Okay, so let's go on to the Dow Jones Industrials here. I've been talking about one thing that was really bothersome. It's that's been a high here in green. I'm just going to highlight it. Highlight this high in green right here, which is actually red, which is below this high, and even though we have a pattern of rising bottoms here along this area on the bottom, we have a pattern of declining tops. That means that this thing could easily be in a downtrend. And I'm going to say this right here. This mark right here that we have at the very end here, where the where the circle is, that is actually slightly below this bottom. So we now have a bottom below a bottom and a top below a top. That's called a downtrend. That's right. That's all it takes. Highs below highs, lows below lows, downtrend. Highs above highs, lows above highs, uptrend. Simple as that. We're going to get into it when we do a little bit more of our Markonomics 101 University, and we'll have a beautiful diploma for all of you people that want to attend and have the certification of a certified technical genius. All right, so let's go on to the next chart, and that is the NASDAQ 100 yearly. Also, what you'll see is a rounded top in red. That's what I put. And that red straight line is kind of a head and shoulders line. If it breaks down, and look at that last day, you know, we're pretty close to breaking down. 10,750 or 750, and we are in a new downtrend. We're in a new bear market. I've been saying this for weeks anyway, that we've already topped. I'm pretty sure now that at this point, we're getting more and more confirmation of a top. And as a matter of fact, this market appears to be gaining momentum on the way down, not the other way around. This is going to be a very strong, in all likelihood, a very sharp decline, a strong decline. Whether it's a crash or not is a matter of semantics, but it's at least going to be a waterfall. It's in October. It's time for scary time, and the market's overvalued. What more do you need? You need Ace to bark. That's what you need. Okay, so let's go to the Standard & Poor's 100 yearly. For the yearly chart, same kind of thing. You've got, again, sort of a head and shoulders rounded pattern. It broke it broke this green uptrend, and you've got now the circle on the right, the red circle on the right. It is really close to breaking down its resistance. I mean, it breaks through 3,200, and this thing is in a downtrend, and it's made a head and shoulders type of top. I mean, that is not a good sign. It's just not likely to reverse and suddenly go up. It could. Anything can happen, but not likely. You know, we're always playing odds in this market. And right now, the odds do not favor any kind of advance in the near future. They favor the opposite. Okay, this is Apple. Okay, we're going to go through some of the big tech stocks and the ones that have all the market cap. Apple's a sell. As you can see, it's not quite a sell in that it has to break this red line here that goes across sort of the triangle formation. But, you know, Apple did not make a new high. And Apple supposedly had great earnings, or will have great earnings. It did not make a new high, and it's been kind of creeping down. So, you know, this week, I believe it's Thursday, Amazon, Apple, Google, and Facebook all report earnings. How they react to those earnings is going to mean everything. My gut feeling is they're going to act like Microsoft. Microsoft had terrific earnings, supposedly, and the stock went down. So the market has factored in everything that is good, and there's no more good news left. That's why these things go down, even on good news, because everybody's already factored in the good news. Okay, so Amazon, here I've got, you know, the perfect head and shoulders pattern. We've been talking about this for months, actually for weeks. And Amazon broke out of a pattern. It is now making the right shoulder of a head and shoulders pattern. It's got about 200 points left. And if this thing breaks down, yeah, it's going to follow the market down. I think all of these are acting the same way. And that's what tells me that the direction is going to be down. You know, when you have individual stocks, there's very few that are in good patterns right now. I can't even find any. So it's tough. This is Facebook. Notice I've drawn in my favorite skull and crossbones in there. You know, I'm a very good artist. As a matter of fact, I'm going to sign this because my art goes for a lot of money. I just want you guys to know. Yeah, there you go. Now, look at that. I just turned a worthless piece of paper into $5,000 worth of collectible, priceless art. So much so that Josh is willing to take this from me, but he's not going to get a chance to, are you? You better not come near my art, pal. All right. Now, Facebook is also in a head and shoulders pattern, also in a rounded top pattern, also having broken a rising trend line, also very close to coming down. So here's my guess. My guess is on Thursday when the biggies report, that would be tomorrow afternoon, we're going to see something, you know, fairly majorly dramatic. I suspect on the downside. I don't see how these stocks are going to rally because there's just too much optimism in them. And, you know, we could have a big move in the market in a very short period of time. And that's what I've been telling you. Waterfall, waterfall, crash, waterfall could happen. The reason it could happen this time is because it's so overbought. It's so overvalued. The chart patterns don't look good. Everything about it says that this thing is cooked. And if you're holding on to stocks, God bless you. You know, God, I'm gonna say a prayer for you, because you are going to have a lot less money in about 2 weeks if you don't sell those stocks. Okay. But I really hope you do, because I don't want to see, the whole purpose of this show is so, people don't get taken by Wall Street. I want you guys to understand, what really ticks back there, what really makes money for people, what really doesn't make money for people. I don't want to see people lose money because of Wall Street telling them to buy a certain stock when it's a piece of crap like Facebook is right here. All right. So I'm going to go next to Google. And once again, head and shoulders pattern drawn in blue. A nice sell signal in my text lettering here, and that's basically Google. Doesn't look good either. Reports on Thursday. Can it actually do better than what the street expects? Here's Microsoft. They just reported the other day. They went down today 10 points on record earnings. I don't know how the hell they get to record earnings. When it comes right down to it, I've seen so many balance sheets that are fictitious. It's not funny. They come up with all kinds of categories like fudge factors payable, fudge factors receivable, unclassified, undocumented receivables, deferred. Oh my God. You don't even know. You just shove a bunch of stuff in miscellaneous, and that way you always have a profit. Okay, so Microsoft is perfect head and shoulders pattern. What you'll notice on the right of the chart, it is coming very close to this line at about 195 to 200. That is where Microsoft is going to be in trouble. And this is going to happen simultaneously. All of these big stocks look exactly like this. That's just the scary thing. You're not going to have anybody going up while everybody's going down. So this one's Tesla. This one's actually one of the better looking patterns. I hate this company. This is the company everybody loves to hate. Well, I shouldn't say that. I love to hate it. Ace loves to hate it. Josh loves to hate it. But the thing is, it's still in a decent pattern. It's still in a triangle. Talking about fudge factors payable. I don't know how the hell they get financials out of this, how this company makes a profit when it has no margins. That's a new one to me. But anyway, it's in a triangle pattern. I think it's going to break down. I would not hold this. If you own this up here, thank your lucky stars that you own it and you bought it cheaper, chances are. And you made a ton of money, and take your money off the table before the table takes the money off of you. Be happy. Go home. Eat at Ruth's Chris. Have a great ribeye, bone in, medium rare. It's the only way to make it, by the way. Okay. UGL. We've been way bullish on gold all year and way bullish on silver. Well, that didn't turn out to be one of our better calls. We've been right on some really important calls. This has not been one of them, although we've been bullish most of the year. But right here, I thought this was just going to, just stay in sort of that triangle pattern that it has, where we would have just drawn this right here and it would have broken up out of here. It didn't. That's what I expected. It didn't happen. So, right here, it basically gapped through the support line. And here it is. It's just kind of floundering. And if you look at the last piece right there, it doesn't look like it's, this is not a consolidation and a turnaround. This is basically another leg down. So I'm not quite sure why gold is going down. If it's because of strength in the dollar, I don't see it. It could be because interest rates are going up, although they're still at 1%. I don't know why that's a big deal, but who knows? We'll as time plays out, we'll know more. Okay. This is AGQ. This is the silver ETF. This is one I've been the most excited about and the one I've gotten my butt kicked the most. Right here, there's a sell signal on silver. We're no longer bullish. This thing is still maintained within this green, uptrend line. And if you, and it had a beautiful pattern up here, I thought anyway, I thought it was a damn good pattern. And I thought for sure that when we had this triangle up here, we were going to see a nice breakout up here and take all the silver companies with it. And I was loaded to the gills expecting that. Wrong! See this big gap right here? I had to eat that one without hardly a trade. I had a stop limit, and normally I would have sold like right here, because that would have made my thesis that was going up, in value, in operational. Well, I didn't even have a chance to get there because by the time I blinked, it was about 10 points lower and about 20% lower. So to that, I still get sick when I think about it. Okay. All right, let's keep going. I'm not going to complain about that anymore, at least until next time. All right, these are the miners. These are the gold miners, GDXJ. It's an ETF. What I like about this is that the miners sometimes act differently than the metals. And in general, the miners and the metals should be heading in the same direction for you to feel confidence. I was actually confident because the metals looked like they were strong, and the miners looked strong and the metals didn't. All of these, like up here, pretty much almost every company that I've mentioned to people, as following, has been kind of in this pattern too, and that to me looked like a flag. So I didn't think of this as necessarily being a bad pattern. It just could have been a longer flag and a longer consolidation. But when you look at like this thing at the very end, just go, that just got that. Ugh. There will be a time to buy these, and that's the good news. The good news is if you're holding some, if you are holding cash or you are being short a little bit, this is going to be a good time to buy some things like these, like precious metals. It's not going to be a good time to buy Amazon cheap. Amazon will get cheaper and cheaper and cheaper and cheaper and cheaper. And so Microsoft, and so Facebook, and so Apple. All of those stocks are going to get cheaper. Too many people own them. They cannot possibly produce the kind of results that they're expected to produce in an economy where people are walking around wearing these as if these are supposedly doing them any good. I know it does me a lot of good because at least I can see the charts I'm looking at. But when people aren't working, I don't know how the hell that we're exactly going to have a good economy. Anyway, this is, let's go on to, that was the miners. This is Eldorado Gold. I'm only going to show a couple miners here, okay, because it's too early to buy gold and they don't look good right now at all. But Eldorado I picked out because when you buy gold and silver, when we give you the signal, and we will give you the signal because it's in a major 5-year bull market. Gold is going to 5 to 10,000, silver $250 to $500. So if you're a long-term investor, you can deal with some of these ups and downs. We're not, we're swing traders. That's a 2-week trade, and none of it is designed to hold for 2 years. This one had a nice uptrend. It even made a new high up here, which is kind of unusual because nothing else was making a new high, but it did. And it just shows good relative strength. I mean, it's stronger than all the other gold companies. And so, this is a company that you should take a look at for when the time is right. Time is not right. All right. Now, the other thing about Eldorado I want to show you is even when you have like all that volatility at the end, well, you still have, look at this. You still have this thing right here. Still, I mean, this thing is still has a long ways to go. And those little ups and downs that you see in Eldorado, by comparison to where the hell the thing is going, I wouldn't worry about it too much. You might want to wait before you get in a little bit and get a little bit of better execution. But even if you don't get in at the right price, just this thing's going up. That's all there is to it. I mean, I don't see how any other possibility can occur because there's so many dollars being printed for our stimuluses and our debt and this and that and our military and, God knows what else, PPP programs. We all need our paychecks protected. We all need more fraud in our lives. So let's see, we're going to go to next. This is called Wheaton Precious Metals. This is one of the other companies that I like. And, what you'll notice, very strong company relative to precious metals. But at the very end here in green, we have a sell signal right there. Oops, let me just make sure and I get that. Oops. And I'm just going to do that. Like right there is a sell signal. Right there is a big gap down because we had this little area up here that was kind of protecting it. And maybe that was a support area. Nope. Sorry. All right. US dollar. The US dollar is kind of a mystery. The US dollar is a mystery because it made a nice saucer bottom, which is a really good bottoming pattern, and that's actually what put a little bit of the kibosh on gold. But now all of a sudden it's starting to go back down. And, one thing you have to understand, it's just as simple as this: dollar plus everything, all else down. Okay? And it's that simple. The dollar goes up, everything else goes down. I mean, it's that simple because everything's denominated in dollars. So if the dollar goes down, your $20,000 car is now going to cost you $30,000 because the dollar doesn't buy as much. That's the dollar going down means that's why gold goes up. So, you want relatively a strong or a stable dollar, but you don't want one that's getting the crap beat out of it because we're printing up so much of it because our economy is just awash with paper. Alrighty. And this is the 5-year Treasury. I've been picking up on interest rates recently because I think they're among the most important things people are not talking about. Interest rates are going up. I want to make this clear. I am not uncertain about this. Interest rates are going up. They have been going down for 32 years. Paul Volcker was the Fed chairman in 1982 when they peaked at 20%. They've been coming down ever since. The 10-year, though, is the benchmark. That's the one that, in general, people look at to assess the rate of interest. It is not a short rate. It's not a long rate. Not controlled by the Fed, but it is sort of a benchmark rate. What you'll notice, this thing also is having a saucer bottom, and it sure does look to me like it is breaking out slowly but surely. And I'm telling you, when interest rates break out like this from low levels to high levels, the distortions on the economy are incredible and to financial institutions. You know why? There's this thing called duration. I don't know how many of you understand it, but the maturity of a bond is when it actually comes due to be paid in full. The duration of a bond is similar to the maturity in that it is the longer the maturity is, the longer the duration is. But the duration is not exactly the maturity because some of the coupons you get before the, say, 30-year bond is up. But in general, duration means this: for every move in interest rates, every basis point move, duration is the amount that the bond moves. So if interest rates go up by 1%, the bond goes down by 5, that's a duration of 5. Okay, simple as that. Now, when you start getting rates like at 50 basis points that are going up to like now 90 here at the very end, and then we're going to have this now the 30-year, you now look at this, and all of a sudden you've had rates go down, rates around 1%, as a matter of fact, below 1%, and now they're almost all the way back to 1.7. Now, that doesn't seem like a lot, 1 to 1.7, but think about it. It's like going from 10 to 17% in interest. Same exact thing. The same math applies. That's a big move. And if there are institutions, players, hedge funds, you name it, that are basically holding long bonds. So in other words, they're long duration. They're going to get their asses kicked. Trust me. Because this is exactly the kind of market where things are so extreme that, you forget about just how much you are affected by certain moves. One of them is a small move in interest rates. It's going to kill a lot of people. And I'm telling you, those bodies, when we start having interest rates go up, those bodies will start floating to the surface. Just watch. All right. Now we're back to the financials, and again, these are where you are having the combination of a crappy economy, nobody working, nobody able to pay their debts, nobody having to pay their debts. Thank you, Uncle Sam, for making theft legalized. Those of us that happen to be a landlord know that quite well, that we have legalized theft in this country. Thank you. In any event, this is the bank index. The Philadelphia Bank Index. And what you can see here is that, once again, these look crappy. You've got a sell signal here. You've got this thing in a triangle. And look at the very end of this thing. At the very end. Oops, there we go. Just want to show you this real quick because at the very end, you got this right here. That thing just does not look good. And, it almost, for a minute there, looked like it might be breaking out. Now, no. I don't think so at all. Let's go on to the next one. Broker dealer index. As you can see here, this is a broker dealer that I have painted on this broker dealer index, and he doesn't like it at all. He's going, "Ah!" That's because broker dealers are the kind of guys that make a lot of money whether the market goes up or down. And so he's now got to figure out a way to talk you into buying stocks. Even though the market's going down. That's pretty hard for a broker dealer to do unless they read their script, and then of course they can do it. Yeah, stocks are going up from here. The 20 PEs that are too high are going to become 30 PEs soon and 40 PEs soon, and these are the companies that are going to lead the next millennium. Heard that one before? Where you lost all your money? So have I. Okay, so this one is a broker dealer index. Also breaking down, doesn't look good. All right. Here we're at American Express. I just got an American Express card. I'm very proud of myself for having had one. But right now, I wouldn't want to own the stock. I mean, look at this. Broken out of a triangle. It's now made a low below a low, and I'm going to show you that real quick. Right here versus right here, and it's made tops below tops. This thing is in a downtrend. It is breaking down. It is leading the market downward. This is a company that is telling you bad things are coming our way, including going off this stupid waterfall. God, I'm getting like spritz from all this crap. Okay, let's keep going. All right, so the next one is Bank of America. Let's make Bank of America great again. Not a chance. This thing is in such bad shape. Not only did it break out here that we can see, but, you know, even if you go to the very end here, you know, it just looks awful. Look at that. Again, lows beneath lows, highs beneath highs. What does that mean? A downtrend. What does a downtrend mean? We're not in an uptrend, which means no bull market, which means we're going down. All right, we're going down. That's what a downtrend is. Going down. Highs below highs, lows below lows. Okay. Oh my God, my favorite company in the whole world. We've been talking about this one for weeks. This is probably the most indicative of how bad in trouble the market is, especially the financial sector. This is good old Warren Buffett's Berkshire Hathaway, the holding company of Geico, a bunch of banks, Apple, and a real estate company, and his office, of course, in Omaha, Nebraska. And this has formed a perfect head and shoulders, broke it on Thursday and Friday, which is what we'd been suggesting for weeks. When this thing broke, it was all over. It's all over. And what I've noted here is the left shoulder, the right shoulder, and head, and how those are constructed in a graph. But this thing, Berkshire Hathaway, is telling us really bad stuff right now. I mean, there's no way to make that a good chart. Citigroup, same thing. This looks like a piece of crap. And this thing is also making lower lows, lower highs, higher lows. I mean, I'm sorry, lower highs, higher lows, or lower highs, lower lows. That's a downtrend. That's a bear market. That's bad. All right. JP Morgan, same thing. Came out with great earnings, broke down, rallied back up to trend line, which is what they often do. And then look at this at the very end here at the side. You know, it looks like it's just ready to go. You know, this is the blue chip, the biggest money center bank there is. And I'm not saying it's going to go bankrupt or anything like that, but it doesn't look like it's doing very well, does it? Especially not with the market at close to near highs. It's not doing well at all. And then finally, of course, we have Wells Fargo, which I talk about a lot. I like Wells Fargo, but I don't like the stock. And if you look at Wells Fargo here, first of all, I want you to notice the words Wells Fargo, and that they were so meticulously, nicely put on the chart like that. That's got to impress you, because my penmanship is pretty crappy. But right here, as you can see in yellow, we've actually broken to new lows on Friday. You know where that circle is? And the red line is where that support was. You know, this is broken to a new low. Okay, the markets are only a few percent below their highs, and this thing's broken to a new low. That's not good. We are now flying over the waterfall, and I don't want to fly too much over here because it is windy and rainy and all that kind of crap. But I'm telling you, I am about as close to falling over as the market is. With that, I want to say thank you very much for coming in. We're going to have some more interesting stuff over the weekend, including which way things are going to go, which things you ought to be buying, which things you ought to be avoiding. Be informed, not misled. Please like us and subscribe us, because we love you to death and we want you to give us comments on this. We are giving you the best information that there is on Wall Street, the most accurate, the most truthful, at the least price. Say something. Have a conversation with us. We're here to help. Thank you very much. See you next time.